Good morning, everybody. Hey, welcome to Tuesday, February 11th. I hope your day is off to a great start. As we yesterday was a pretty decent day on Wall Street, considering the way it was kind of etching out at the beginning of the day. So, hey, well, again, thank you for joining us today. Listen, folks, if you are in that retirement danger zone, what is that? That's the 10 years prior to your expected retirement and the 10 years after. If you have any kind of misstep in that 20-year time frame, it could really mess up your retirement. Give us a call at 863-382-0037, and let's schedule your financial x-ray to make sure you don't have too much risk given where you are in your station of life. Give us a call right now. We look forward to meeting with you and going through that process.
It's time to check in on your money and see what's going on Wall Street. Boy, we got some big moves going on as we get toward I got to call it the tail end of earnings season, but some household names reporting and news about a big merger. Let's go downtown, find out what's going on. Statler Financial Services' very own Phillip Statler's on the line. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. I hope you are too. Yesterday, not a bad day when we look at Wall Street.
Yeah, we weren't really feeling very optimistic in the morning as it looked pretty flat to even pink, but Dow up 174 points, NASDAQ up over 107 points. That's over a full percent. And the Standard & Poor's up by 0.75%. Turned into a pretty doggone good day, and we get to start the morning out with something that for stock traders almost borders on heroin. Court approval of T-Mobile and Sprint merging. My understanding is Sprint stock is up something like 60% this morning in pre-trading, something asinine like that. And T-Mobile is up by darn near 8%. Investors like that stuff, don't they?
Yeah, well, in this case they do. I mean, let's think it. How long have they been working on getting this thing done? It seems like it's been forever. You know, it was on again, off again, and on, and now we got to go to FTC to get approval, and so go to the courts to override FTC. So it's just been a long process, and Sprint, let's face it, has been hanging on by a thread.
Absolutely. I'm not a big fan of concentrated power in any industry, but I mean, we got along just fine with one phone company for a long, long time. This would end up basically creating 3 viable cell phone choices in almost every market in the country instead of having 2 viable and one that's iffy. From a public policy standpoint, it makes some sense to me, and from an investment standpoint, as you say, Sprint has been kind of holding on by a thread, and T-Mobile has been no great shakes. And outside of the major cities, it basically makes a third viable carrier.
Yeah, it really does. It should increase some competition there, and hopefully they can work out that merger, and it really does give them a larger presence across the nation, because you're right. You know, both of those have been spotty at best. And hopefully they combine their forces, and maybe that will give them a better exposure across the country.
Yeah, it was one of those rare times where fewer competitors in an industry could increase competition, because this would create like I said, a third viable carrier. And T-Mobile has a whole pile of new frequencies. They won at an FCC auction a couple of years ago that for 5G work could be really, really fascinating, but it's going to take more capital than they've got to be able to build them out. So it's going to be an intriguing situation. And the bottom line of the headline is the court approved the merger, and that means it probably will now go forward, and that's good news. And we're seeing a lot of stock movement pre-market on that. Talking about movement in the other direction, we had a couple of major league misses, and the one that caught my eye the biggest was Goodyear. Boy, did they have a rough quarter last quarter.
Well, Goodyear did. They missed across the board. Missed on earnings. They missed on revenue. They just got just not a good quarter for them. They closed down yesterday 1.8%. Right now they're down another almost 3% this morning before the market gets going. So they're down $12.80. Their 52-week high was $20.70. So they're pretty far off their highs.
Oh, without a doubt. What did they say? I did not see any drill down on the report. Did you? What caused it? I mean, that's one of the grand old American manufacturing names.
I don't know. I did not see the drill down. Actually, I had to go look for it after you and I got on the phone because I didn't have that one. So I just real quick pulled up the price on it.
Okay, it's not very often you end up seeing a stock missing by like 50 cents a share on the earnings per share number. It was just one of those monstrous misses that catches the attention. The other big miss on the morning, and I don't have the quantity on that, but you do, Under Armour sells stock under two different ticker symbols for different classes of stock. Both of them are leading my loser list this morning. I have to assume Under Armour had a crummy quarter as well.
They did. They actually lost 3 cents a share. They were expected to make 10 cents a share. But yeah, revenue was down also. They're saying that the coronavirus is going to hit them big this year coming up. And so the 2020 expectation out there is probably really hitting them hard too, because Under Armour's come in and said, look, for 2020, our expectation is that we're going to earn 10 to 13 cents a share for the whole year. And the analyst expectation was 46 cents a share. So a big disconnect there. They're even talking about some reorganization things that they're having to do, but they have a lot of pressure on them. They're down over 15% this morning.
Yeah, they're really smarting. Like Joe Biden said about the election in Iowa, that's a punch to the gut. It just gets into the notion of just how widespread the effects of that coronavirus can do. Under Armour does a lot of manufacturing over in the Asian basin, but they also sell a lot over there, so they're kind of getting hit with a double whammy, I've got to believe.
Yeah, I think so. They really are. That's one of those things that, unfortunately, they are susceptible to when you do a lot of stuff over in China. And I'm sure that when we hear from like the likes of Nike and some of those other companies that do a lot of business in China, we may see a lot of the same type of things.
I suspect we probably will. Talking about another ancillary line that gets hit by the coronavirus that you wouldn't think about, your titanium driver golfers, those are almost all manufactured over in China. And Callaway had some bad news when they reported as well, didn't they?
Yeah, they did. They lost 26 cents a share in the fourth quarter, which was more than expected. They were expected to lose about 23 cents a share. Obviously, revenue was a little bit better than expected, but I think a lot of this is coming in the coronavirus, how it's going to affect them both on sales and supply side going forward. And so that's really kind of taking its toll on them today. I'll find it here in a minute. They're down about a little over 4%.
That's still not a good feeling. Yeah, it's one of the things that golfers don't think about. But those titanium heads are manufactured over in China. If you can't get them out, you can't sell them. And a company that's got a challenge anyway is going to have their share of difficulties out of that. Other indications you got as to how the market is going to be moving this morning?
So I found AutoNation being interested. They're the largest car retailer. They beat both on earnings per share and revenue in the fourth quarter. Their same-store sales were higher than expected. They're seeing a big boost, high demand for pre-owned automobiles. They came in at $1.74 a share. They were expected to come in at $1.14. So what's that, about a 60-cent beat? So they're looking good there. They're up about 9.25% this morning.
Ooh, not bad. You mentioned that before we went on the air. It caught my eye because we talked about Mattel showing some substantial cutbacks on their report yesterday. The other side of those two big toy manufacturers, Hasbro, on the other hand, was doing just fine, I gather.
Well, they did. They had a really good quarter. They beat by over 30 cents a share. Now, their sales did fall short of what was expected, but they had a really big boost on their bottom line because of Disney's Frozen 2, the Star Wars movies. These toy companies are so intertwined with what's happening on the movie screen that's vitally important to them. And so Hasbro was able to do well. They're up almost 6% this morning.
Nothing like a movie tie-in to be able to make a company's quarter in the toy business, right?
Yep. And the last one I have, Dave, is Hilton. Hilton came out. They earned $1 a share. That was 4 cents above what was expected. Revenue also beat. They kind of put out a 2020 earnings outlook, which was a little below what the analysts had forecasted. But, you know, some of that could be the coronavirus. I'm sure a lot of that's the coronavirus and the unknown that's there. And so once that becomes a known, I think we'll see some adjustments on the travel industry. But they're trading down about 0.5% this morning.
I got to assume that virtually all the travel stocks, if they get rid of the coronavirus quickly, we'll end up having some nice earnings surprises in quarters that come. But for the moment, guidance is not very optimistic in the travel-related industry, is it?
No, it's not, because that is a big pocket of uncertainty, and until that gets resolved, because let's face it, the one thing the market does not like is uncertainty.
Exactly. They'd rather have bad news they know about than no news or doubtful news to begin with. Setting the table again this morning, green day on Wall Street yesterday, resoundingly green on the NASDAQ. They were up 108 points, up 1.13%. Dow was up 174. Standard & Poor's was up over 24. That was a pleasant surprise to both of us, the way the morning was starting out. 45 minutes in before we start throwing real money around, Phillip. What are we looking at this morning?
Hey, we're seeing all green again today, Dave. The Dow's up a little over 100 points, about 1/3%. S&P 500 is in that same ballpark. It's up a little over $10, 1/3%. NASDAQ's up 43. It's up almost 0.5% this morning. Looked at gold and silver. They're trading down just a tad this morning. Crude oil kicking back up, Dave. It's up 1.78% this morning to $50.45 a barrel.
Got to think, maybe we ought to buy our cash at the end of the day if we could track crude oil prices that well, because that still looks like it's about where it was yesterday morning, but we must take a dip in the evening every day.
Yeah, that means that what that really means, though, because it's up 88 cents a barrel, that means that it closed yesterday below 50.
Yeah, that's amazing to me. Overseas markets, mixed closings in Asia overnight last night. Europe generally trending upward this morning. Phillip, somebody needs to find out how to make sure retirement is secure for me and my family. That's a good way to start out, by getting an impartial advisor. Let's find out how much risk there is in my portfolio. How do I find you?
Dave, it's the danger zone. Are you 10 years out from retirement, or are you 10 years into retirement? That 20-year time span is vitally important. If you have a misstep in that 20-year time period, it can be devastating to your retirement. Give me a call at 863-382-0037 to schedule your financial x-ray to make sure that you don't get caught in that mess. Give us a call, 863-382-0037. Catch us online at statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings. This week, we're talking about the new Secure Act. Tune in and find out.
Oh, cool. I'll pay attention then. Thank you, sir. We'll be back here again tomorrow morning with a look at the daily activity. Phillip, thank you so much. I appreciate it. Have a good day.
All right, buddy. You too. We look forward to talking to you again tomorrow.
Got you covered. Thank you, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Passengers, flight 1.
Folks, please don't forget, if you are in that retirement danger zone, again, like I said, 10 years prior to your retirement date, 10 years after your retirement date, give us a call. It is important that you get off on the right foot and that you're doing things correctly to get into that area, and don't get taken out because of the markets. Give us a call, 863-382-0037. Thanks for joining us. I look forward to talking to you again tomorrow.